Okay, so in this video, a couple of things. I want to show a trade that I took today to show some of these tools at work. And also, we'll try to run through particularly each or all of the common setups. Now that we have the principles in place and the tools, we understand what we're using, sort of a checklist of opportunities and trade entries, so to get specific with that. Okay, so starting with the trade I took today, very simply, daily chart here, make sure we know where we are in the bigger picture. There's a resistance that got broken. This is now the next day just starting, so we were in the process of doing this fake breakout pattern, but also going into new high ground. And remember, do higher prices attract sellers? We want to find out, and we'll get to that on the smaller time frames. I don't focus too much on volume on the higher time frames unless something really stands out, but typically, generally, as I say, there's a lot of information within that one candle, and it really helps to just see within there what's going on. So again, here, nothing really stands out, but that is higher prices in the 1 hour. It can tell us if those higher prices above resistance did attract sellers or not. Let's see. There's also a fib, and that's that same level pretty much there. So, you know, as I say with these fibs and support resistance, very often you can overshoot a level slightly and reverse, and that's not really a problem if you're getting rejected. That's why we often get fake breakout patterns and such. Like this resistance overshoots, but it still respected it. So as long as it behaves properly, in this case you see that type of reaction. So same thing here. So it's not over because we've moved up here. If we run into selling and we move quickly back below, it still may act as a resistance, right? Fake breakout pattern, if anything, is a sign that it should reverse. At least one piece of information. Okay, so that's just our overview. Pretty simple. And so again, here's well, technically yesterday on the charts where I took the short. But let's look at our situation, our background. Now we're on the 1 hour chart. And again, we can simply mark up support resistance levels. This was a resistance that got broken. Eventually came back to test after, and I use that to help my target area. And we're generally seeing that we're in an uptrend, right? Very simple, very clear. Let's do that on the high price. We see that that's also 618. We see how these tools, it's always nice when they snap together like that. So I can draw that fib. Now again, this is now where price has entered this area, but at the time that I was looking to trade, price was here, and I took this short. So this was a good projection of a potential target, and to draw that fib, see that fib zone there, see that previous resistance can act as support. So as I'm selling, that's already marked in advance, and you can see that it respected that very well. Okay. So that more helped on targets, if anything, to mark those levels and see where a short here may lose probability to continue and give a good target. Okay. But to get into, again, the setup, the background here. Higher highs, higher low, an obvious uptrend. But do you notice something about this trend? And this is what, when I say, I use the term judging the health of a trend. How healthy does this trend look to you? Consider what happened yesterday, right? This is the key. We have ultra high volume at the high price, wide spread, closing in the middle, nice rejection, and a bearish reaction. So we have our two principles shown here. Higher prices attracted a lot of activity, selling. So we know that the higher prices attracted selling in this case. And the effort versus result, the reaction, bearish, and that creating a resistance. Now going forward, we'll get into that. So just to note, if this was not here, there's no way I would be looking to sell. That's how different this is. It appears to be an uptrend. If you're not looking at volume, you would not know that they had taken profit and smart money is now selling and attracted them to sell. On a side note, these are today's pivots. Again, today is marked by this separator. So we're not seeing the pivots of the time that I took the trade or back here. These are going forward going to be today's levels. So just to note that those are not accurate at the moment. So again, Now we're looking to go short because the volume was so extremely high, high price, bearish reaction, weakness comes in, climactic. So no matter how good that trend looks, how good the news is, whatever the others are saying and this and that and the other, it's time to look to sell, right? Okay, so this is, again, the beginning of distribution phase, as we call it. So markup, healthy markup becomes now distribution at this point, by definition. Think of it as those that have bought are distributing or selling to those that are buying here late in a trend. Very bad method of trading. Chasing that price up late in a trend into new high ground. And that's typically not going to be a good way to trade. So, again, if we're looking to go in long, ideally we want pullbacks and we want to see reaccumulation, right? So this is not the kind of thing that's going to have me go long here. Okay, so it ends up being a nice trap. Whoever, this buy frenzy that went on, didn't work out too good for them. Okay, so going forward now, we know that on this day, today, that I was looking to sell because I have weakness in the background. But let's just continue because we did have another test of that level here. So obviously that's a resistance. That was the high of the day. Asia session, right? So we test this area. And I always prefer, if possible, to see a double top or a double bottom. It doesn't mean it has to be there. But at this point, after this weakness had shown up, it got late in the day. See 16 GMT, 17 GMT. And really at that time, I don't want to enter any fresh positions. This is a good example of why. It just sort of floated up with this short bias now. So, the activity is just not there. It's off hours. So we see at least the start of the next day, Asia Open, that we test this level. And we get, now, again, a lot of showing these live trades shows a lot of these little nuances. So here's another one. This time of day, we're never going to see high volume like this unless there's really crazy news, some big decision or something's going on. Typically, 9 out of 10 times or more, you're not going to see high volume here. So typically, you'd want to say, all right, we want high volume here. This is an up thrust, as it's called in VSA, because it went into new high ground and got rejected. Very simple. You don't have to worry really about memorizing terms. I think I'll just review them at the end. But as I call it, the fake breakout pattern, or you can also call it an up thrust. It went into new high ground over resistance, but got rejected. And again, rejected. So we see selling to these higher prices and at least volume, and really comparing to recent activity. Let's look at last week, what happened that time of day. There, right there. We get a sense of really what the average is, right? And now let's look at what we have here. A little higher than usual, right? A little higher than usual. So that's good. At our high price and our rejection on the fake breakout. So that's the best thing we can do. Well, there's one more thing we can add to this. Again, 1 hour is a perfect overview time frame. Going to the smaller time frames, if you want to keep it simple, 5 minute and 1 hour, and then your higher time frames for your general tools in the beginning of your setup. So going to the smaller time frames in this area can also confirm or not confirm or cancel out what we're seeing. So I also want to take the opportunity to show that. Let's see now. So going to this, let me just show you exactly where I'm going here. So this initial top and then here, right? And we want to make sure on the smaller time frames that it's agreeing and that they're selling into these up moves, okay? So I can take my time on this because there's a lot of good stuff to show. So here's that first where we saw the climactic high volume on the 1 hour with that bearish reaction. Here it is on the 5 minute. And there is our confirmation. This is ideally what we need to see. This is a good ideal picture. Maybe anything more perfect would, maybe this wouldn't be there, but that might have been news. But this is our proper way to end a trend is what we're talking about here. And to see weakness to the point that we can go counter trend. So it's extremely high volume there. And it's off the high price. That's the resistance that formed eventually. It started with that. So that's that volume, high volume at high prices, bearish reaction, and attracting those sellers, as we know. So that is confirmed. Again, it could have not matched up where you've had maybe high volume in other places, right, creating a 1 hour candle with high volume, but then we go to the 5 minute, and what if we saw that this high price area did not have high volume? What if it dropped down there and the high volume was in other places? in that 1 hour candle, then we wouldn't have proper weakness. We wouldn't be really confirming what's gone on here. So as I say, it's a closer look and more detail of the same thing. Sure, 1 hour says it was selling in this area or a lot of activity in this area, potentially selling. 5 minute confirms with that same principle that it was in fact off the high area. If that volume was just randomly other places and regular, medium, or low here, we would not have that proper sign of weakness. Okay? So, and again, we're talking about counter trend. The higher, the better. So this gave me confidence, when price is moving up in a nice trend for a while to now look for the short today. So that was yesterday. Now let's look again at today for Asia open. When we tested that level, and we looked at Asia on the 1 hour, right? We saw that volume situation. Now here's the test of that level, and look at the reaction there. Now, the volume didn't stick out particularly on that candle, but look at the reaction to that level. And again, we test here. Let's use our tools over and over again. Resistance was formed, fake breakout. Look at the volume. As it tried to move just above the resistance of that day that already attracted. Are higher prices attracting sellers? Ultra high volume is the highest volume of all of this. Moving up here, closing off the high, ultra high volume, bearish reaction. Again, this tested up here, it went actually slightly higher. And look at that reaction. Selling into the up move, volume generally high off of this area. So now we know that smart money has chosen this price area to take profit and go short. These things work together. Why would they take profit? Because supply is coming in. It works together. So we have weakness now, and we're switching to a short bias. This is an example where I most often don't trade at this time of day, but there's information that you can get to follow the storyline. And they've chosen this area to take profit. Another principle that I've talked about shows up here, sustained selling versus temporary. If we saw this go on, but then further tests of the level, price becomes accepted, volume is low, there's not rejections, and you're sitting up there, are we seeing sustained selling in this area if we saw that? No. So this proves to us, that's why I say I always like the double top or double bottom better, and knowing that there's better probability, because over time they're showing that they're using this level to position short, not just once, but repeatedly. So we can have confidence about what smart money is doing there, right? Now you're starting to get the picture why I'm really confidently looking for the short today. Now, one of the best setups, so I haven't mentioned it, is the first fib retracement after weakness. After trend reversal. Sorry, wrong tool. So as I'm coming into trade around New York Open today, I see this obvious swing high-low, and we're about here, right? Now, normally I mark the fib and I get rid of it, but I'll leave it on there just to make it clear what I'm doing there. So, first fib retracement after weakness can very often be a spot to look for a entry. Now, remember, in our phases, this is redistribution, right? We have distribution, we have weakness in the background. And if anything, we can also mark this. This is not typically because it was so fast, but this is our little level of support that appeared after the weakness. So automatic support, like our automatic rally, right? It's not so much clear that it's a range. It didn't really reject it again. But the point is, off of the area of weakness, we started to move down, and we could call this moving into a markdown. We went into lower territory than the weakness had appeared. We started to move out of that area. So we can say that we're in our markdown phase. We have our weakness, our distribution, right? And then we started to mark it down. Now, as we pull up, we look for that retracement entry, right? Particularly at fib is a popular spot, high probability, and we see if there's redistribution. Very simply, if selling is going to continue to come in on retracements. Again, it could move up here and find redistribution. It could trend down, pull up, hit sellers, and with redistribution, and it's still a healthy trend, right? So we'd rather see those volume points come up on retracements. Now that we have this area marked, we know that there's weakness in the background. Let's take a look at what I was looking at today as we're coming into fib. Now, another little nuance that pops up here. Well, news, I'm going to get into news. I'm going to talk about that. So just to note that this is news. The volume's a little exaggerated. And news is something we'll get to later, so I won't even waste time on that right now. So we have our fib zone, our weakness in the background, and what happens as we get to the fib? the volume increases. This is higher than the previous 1, 2, 3, 4, 5, 6, 7, 8, 9. We have to go back to news, which is going to be exaggerated, and before that, higher than all that. Now, I'm emphasizing that because that doesn't stand out really as high volume, and ideally, we could see, there would be more volume on that. The more, the better. We're talking about coming into this fib zone. Are these higher prices attracting sellers? Are we going to see weakness and find redistribution, and we can look to enter? So the higher, the better. But putting aside the exaggerated news volume, this is high enough for me to consider the trade, all things considered, right? So you sort of get a sense of your probability. If this volume was sort of just average in there, I would not be looking for the trade. So at least we're higher than all this stuff besides the exaggerated news volume, right? And you get a sense now of, the probability. And you can, again, like I say, you can see the trades I've taken, and over time, with your experience, settle on what's, your own requirements to enter the trade. So at least that volume was there to my liking in the fib area. It had to be there. And we're seeing some nice rejection price-wise. And so basically some sustained higher volumes if you look at these three, right, trying to push up, getting right to that important 618 level. And the volume's generally higher in this area. So at least it was there. If it was higher, that would be even better, but at least the increase is there where it needs to be, matches the background, and this is that, fib opportunity. So no demand. This is a very early and aggressive entry. And as I go through, I don't know if I'll get now to this video or see how long it is, if not the next video, going through different opportunities that come up, ranging from aggressive to conservative, ranging from sooner entries to more patient entries. So this is an example of an earlier, more aggressive entry. It's the first no demand, volume lower than previous two. Zoom in. Generally a nice low volume level there, lower than previous 1, 2, 3, 4, 5, really. With our weakness, again, that has to come first. Weakness, no demand. Strength, no supply, right? In line with our larger time frames, in line with our tools. So we've found it here. So the entry here, price moving below the low of the no demand, right? Just like a no supply in reverse. And there's the short entry. So that was my entry today. Now, the next thing that comes to mind is if you're looking at this, oh, well, what happened there? Now, first of all, that did not hit my stop. And let's look at my entry price, which I don't remember exactly. So here it's about 5.3, right? That's 11 pips from my entry. So 11 pip drawdown plus spread, 12, 13. So I don't remember my stop at this point, but typically, 20, 25 pip stop. So this did not hit my stop. And again, you see higher prices attracting sellers, right? But at this point, I'm going to let it do its thing. Unless it moves down and I see buyers come in or some problem with the trade, I'm going to have my stop in place and trust the setup. But just to point out, higher prices again came in here, and nice high volume closing off a high. It kind of sat here for a while. It got past 16 GMT, which is again typically these computers just like shut off after that. And you see again, volume drops a bit, the activity drops, the range drops. But I'm positioned where smart money is positioned. So, whether it's eventually or right away, I still have that probability unless something else happened, unless something changes on the chart and I see some information that doesn't line up with the trade. But at this point, it's fine. And, just getting slow and late in the day. But eventually we came down to what we had previously marked going into the session, 618, previous resistance turn support, right? Again, there's that resistance. And look how that became a perfect target. Not only is it a perfect target, we can talk more about targets and using these tools for targets and multiple targets. So I didn't close all my position here as eventually I closed it over time. But, one thing to notice here in particular is also that there was some buying off at this level in large amounts. So that support in 618 did attract some buyers. And, at this point, I'll have some new information by the time I'm trading tomorrow and see where things are. But, if there's buyers here and, sellers here, it may range. And, I won't have to really worry about it until I see a chart tomorrow. But so that pretty much shows a lot of things here, showing when to now look straight against the trend, using the fib retracement and the volume setup in there, using the time frames together. I'm not going to take a trade just because the 5-minute chart says so or just because the 1-hour chart says so. They really should both. If we're talking about reversal trades, if we're talking about going with the trend, that's something that we're going to look at as well. And, that requires not climactic volume, right? That's when we're talking about going against the trend. But an increase over the recent range and, considering our other tools to also guide us when to get in. So we'll see examples of that. So that's what I wanted to start off with. I took a little time on it, so I'll end it here. And the next video, now that you've seen some more real-life entries, again, this was today, and using these tools, I'm going to go and draw up, and we'll run through now in the next video all the most common entries that I take. So we'll move on to that.